Welcome back. We have the management of Gokaldas Exports joining us. Seva Ramakrishnan Ganapathi is Vice Chairman and Managing Director at Gokaldas Exports joining us. Mr. Ganapathi, good morning. Prashant here. Yesterday your stock was up 7-8%. I mean, leave the stock aside, but that's just an indication. Market assumption is tariffs here are going up. They're going much higher in places like Vietnam, Cambodia, where a lot of the China manufacturing moved after the first round of tariffs. So maybe there was some shift to India. Is that really the case?
So it's early days, so we need to see how all of this pans out. Relatively speaking, we are better off compared to other competing countries. Take China, Vietnam, Bangladesh, Indonesia, all of these countries, so we're better off. However, apparel already attracts tariff from 15 to 30%. Now, the new reciprocal tariff, which ranges from 26% for India to 54% for China, are all in addition. Such a high tariff could impact consumer demand as increased costs eventually will be pushed onto the customers. So, of course, this will happen with a phase lag. We will have to see how all of this out and, how does this impact volumes going forward. So that's something which we will have to wait and see, as to the impact of some of the tariff on some of these areas.
What is the tariff US charges right now so far on Indian apparel imports?
So on all apparel imports, US charges anywhere between 15 to 30%, 32%, currently, depending on the product type.
15 to 32%. And what is, for your products, what is it on an average?
On an average, it would be about 17% or thereabouts in that ballpark.
17.
Yeah, that's right.
And what percentage of what you produce goes to the US?
Goes to the US? It's about 70%.
So 70% of what your revenues are tariffed at 17% right now.
That's correct.
And they will be now, from the 9th of April, the 17 plus 26.
That is correct.
I mean, not 26. It'll differ based on... No, it'll be 26, right?
That is correct. The 26 is a flat increment, and then depending on the product, the base tariff will change.
Now, what are the tariffs? What are the cumulative tariffs on Vietnam, Cambodia, China? After this, you must have looked at it. Yeah, the new ones.
Against our 26, for China it is 54%. I think it is some 45 or odd percent, 46%. Bangladesh, it is some 13%. So 37% against our 26%. So Bangladesh will be +9, Vietnam, there you have, So all of these are...
Mr. Ganapathi, our tariffs, you say, for example, if you take Gokaldas as a proxy for the industry, will be 43%, right? Total 43% tariff.
That is correct.
17 plus 26.
As in the base tariff plus 26, right?
Correct. What is that same number? Existing tariff, because those countries would also charge some tariff, right? On apparel exports to the US.
No. Their base tariff...
Yeah.
So their base tariff remains the same, anywhere from 15 to 32%, depending on what product you export. So China, since they export more synthetic garments, their base tariff will be even higher because synthetics attract anywhere between 25 to 30%. So let's say their average is something like 20%. So on 20%, there's another 54%, so that goes up to about 74%. For China.
Okay, so the delta between our 43 and where they are is how much, roughly, between these three? These are the three important ones. Bangladesh, Vietnam, and...
So when you look at the delta, everything depends on the product type. So remove the base tariff. If you look at our 26, Bangladesh is 37, the delta is 9%. Look at our 26, take China at 54, 26 to 54, that is the delta that we are talking about. That's about 28%. And with Vietnam, it will be about 20% or thereabouts, 19%.
Okay.
That's the tariff delta.
20% tariff delta. I mean, we are cheaper 19%. By just tariff-wise, we're cheaper by 20%. The other
approximately,
the cost of output is it? Can that kind of take care of this difference or no? I mean, in terms of competitiveness,
no, this is huge.
Sheer competitiveness.
This is huge. I mean, a 20% delta and so on and so forth are very large. It's very difficult to manage it through cost management and all of that. So, cost of raw materials, etc., will not offset all of this.
Okay.
This tariff delta is advantage India. But then I think what we really need to keep in mind is that what is the impact of all of this on end user demand? Because all of this looks great on paper. We have to see how does this impact consumer demand in the United States, which is a very large market. And if
Right.
this tariff actually will get passed on to the customers, will they buy in the volumes that they will, they have been used to buying, right? So that is something we need to see. So and if that volume drops, of course, India will still tend to keep a good share of the volume. So there is a benefit for us. But, any drop in volumes does impact the industry as a whole, right?
And we don't
So we
know,
have to balance
just
these
purely
two.
with regards to tariffs, we don't know how these countries will give in, cut tariffs and try to negotiate deals, etc. Right? That tariff differential may change. We don't know, depending on what everybody
Absolutely.
does. I just want to make a quick mention, Mr. Ganapathi, just coming to you. There's a flash at the bottom of the screen. There was this confusion, then it was confirmed because the board which President Tariff had when he announced the tariffs mentioned Indian tariffs at 26%, but then the website said 27%. So the understanding by the end of the day yesterday was that the actual tariff which US will charge on Indian imports is 27. Now what we're saying is that the Annex 1 on the White House website mentions 26% tariff. So basically,
the president can't be wrong. It's as simple as that. Yeah.
So it is,
he was holding a placard which said 26.
Yeah.
The next year on the website said 27. By the end of it, the placard is right.
Correct.
So it's 26.
Yeah, it is 26, not 27. Just
that doesn't make much of a difference.
Yeah, it doesn't make much. It's a technical thing, but yeah, I mean, it is what it is. Mr. Ganapathi, two questions. One, have you heard? It's very, very early, but have you heard? Because the underlying consumer demand in the US. Just look at the stock market yesterday, right? Have you heard from big clients, and you supply to most of them? Gap and Victoria's Secret, and I don't know what. There are so many other big brands. Have you heard anything from them from after what we've seen in terms of tariffs?
See, everybody is trying to assess what the impact will be because every brand has worked out certain scenarios of tariff, and this tariff has been way out of the range of the scenarios that they had worked out. So nobody has absolute clarity on which way the consumer demand will go. So it will take a few days for them to react. But the tariff quantum being so high, they will have to really strategize as to how do they deal with it. These quantums cannot be pushed back to the suppliers because no supplier can bear this kind, nor can the retailer bear this. So eventually it will have to be passed on to the customers.
But have order cancellations started? There is some feedback from the Indian Apparel Association that they're asking for importers are asking for discounts.
No, not yet. It's too
That's
early.
not happened.
So,
You've not seen that.
No. We have not seen that.
Sorry, you were saying, you were adding something.
What I was saying is that, look, at the moment, summer products are already in the warehouses in the United States or are in transit. Now, those will enter at the previous tariff, tariff rates. So the consumer impact will start from fall winter, which is still quite some way off. So we are talking of something like September onwards, because the tariff will impact the incremental goods which are now going from April onwards. So the impact of tariff will come with a phase lag. In the meanwhile, my sense is that many countries will continue negotiations with the US government, and we may see a change to all the tariff tables that we are looking at.
No, absolutely, Mr. Ganapathi. Every day is a new day. Every day these numbers are changing. But as of now, if you work with 26%, how much of it will have to be passed on to the US customer? And therefore, what is your realistic assessment right now in terms of a drop in demand?
So very hard to say. Very, very hard to say. So consumer demand is price elastic, right? And will all of the 26 be passed on to the customer? I think a large chunk of it will have to be because rest of the value chain cannot absorb this. And keep in mind, India, only India is slapped with 26, right? Other countries are even higher. So their imports from Vietnam and China are far, far higher than that of India. So on an average, the impact on US imports will be closer to 30%, 32%, or even 35%. So we got to see whether, such high tariffs can be passed, can be absorbed by the value chain. Unlikely. So it'll get passed on to the customer. Now, whether the customers will react by buying less, what other ameliorating measures are there in the US,
Right.
which allows consumers to come and buy more? All of that will have to be seen in conjunction, and we have time. We have time for about 3-4 months before all of this kicks in, because we're talking of goods which will
Right.
attract tariff and be consumed by customers down the line, not right away.
We take that point entirely, and obviously when things start to look like they're settling, we'll also have the question of whether India can benefit from this by virtue of its own capacity, by its own capabilities, etc.
so.
or not. Players like
so,
you
right?
will obviously outperform, but maybe a large amount of fringe players may not get the similar benefit as one is expecting. But I guess that's a conversation that we'll have at a lot later time. Thank you so much for joining in and giving us your perspective on this one. But